Welcome to the Fear and Greed Business News Afternoon Report for Tuesday, the 11th of December, 2024. I'm Sean Aylmer. Every afternoon, we've got the 5 stories that happened today that you need to know about. Story number 1, the Reserve Bank of Australia has kept the official cash rate on hold at 4.35%, but Governor Michelle Bullock hinted that the Central Bank Board would start thinking about rate cuts if inflation continues to moderate, and she expects it will do that. Markets reacted immediately. Bond traders have now ascribed a 50% chance of a rate cut in February next year and 100% by April. The Aussie dollar, which was trading above 64 US cents, dropped back below that mark. Short-term Aussie dollar movements depends on rate expectations. If rates are expected to be lower, then the Aussie dollar falls. Story number 2, the Australian Stock Exchange had been trading quite a bit lower today, but it jumped after the Reserve Bank's 2:30 p.m. announcement. By the close, it was down less than 0.5% to 8,393 points. The tech sector tumbled most, in part thanks to a big sell-off in Pro-Medicus, which ended down 8.5%. It's run very hard. Maybe there was some profit taking going on. Certainly the company didn't release any new news today. Other tech stocks to fall included WiseTech Global, Xero and REA. The banks were lower, with National Australia Bank and Westpac off more than 2% each. The big winners, though, were the miners on the back of more upbeat news out of Beijing. China wants to run more lax monetary and fiscal policies next year. Good news for the miners. Fortescue Metals jumped 6.5%. Rio was up 5%. BHP more than 3%. Treasury Wine Estates said it has bought the Stone and Moon winery in northeastern China for just over $27 million. Its share price jumped 4%. Platinum Asset Management fell another 3% today after yesterday's news that Suter Regal Partners is walking away from a deal with it. And Myer held its annual general meeting today. The chair, Olivia Wirth, said Black Friday sales were encouraging despite a challenging start to the retail year. Its share price ended up more than 1%. Story number 3, in politics, there's the furore over the use of the Australian flag, after opposition leader Peter Dutton said if elected, he'd only stand in front of the Aussie flag and not the Indigenous flag. Now, Prime Minister Anthony Albanese regularly holds press conferences and general conferences in front of both flags. Peter Dutton told Sky News that Australia should be united under one flag, and he would never address the nation with both the Australian and the Indigenous flags behind him. Later, Shadow Home Affairs Minister James Paterson said Australia needs to have a unifying flag, referring to the current Australian flag. Story number 4, things aren't getting any better at Woolworths, with the New Zealand competition regulator filing charges against the retailer and its Kiwi rival, Pack and Save, claiming both are misleading shoppers on promotional prices and specials. Sounds very familiar, doesn't it? The Commerce Commission's Deputy Chair, Anne Callanan, said the regulator was not satisfied that specials really are special. She said supermarkets in New Zealand have been on notice for a long time about having clear pricing and accurate labelling of specials. Woolies has been in New Zealand for almost 20 years. It has almost 200 stores there, though earnings have disappointed recently. Of course, in Australia, along with Coles, Woolworths is fighting action launched by the Australian Competition and Consumer Commission that alleges promotional prices on hundreds of products were actually higher than a few weeks earlier. And finally, story number 5, a big one for Adland. Omnicom Group has agreed to buy Interpublic Group for $13 billion US. That's about 21 billion Aussie. It will create the world's largest advertising company. Interpublic shareholders will receive Omnicom shares as part of the deal. It's expected to be done in the second half of next year. Been a tough time for ad agencies, with big tech companies hoovering up the marketing dollar and generative AI creeping into the work of creative agencies. The benefit of the tie-up of the two giants, in part at least, is cost savings. The deal will create a company with combined annual revenues of about $25 billion US, well ahead of London-based WPP, which has turnover of about $19 billion US. That's it for the afternoon report for Tuesday, the 11th of December, 2024. Make sure you hit follow on the podcast. We'll be back tomorrow morning with a Tuesday edition of Fear and Greed Business News. I'm Sean Aylmer. Enjoy your evening.